What is up, everybody? Today we're going to be doing technical analysis on a few different currencies here. Right now we're going to do Ripple. We are looking at a 30-minute time frame. What does a 30-minute time frame mean? A 30-minute time frame means that each one of these candlesticks you see represents 30 minutes of price action. Bulls versus the bears, pushing it up, bears pushing it down, bulls pushing it up, and you have a candle that forms. On a 30-minute time frame, each candle represents 30 minutes. 31-minute candles, 6 5-minute candles, 3 10-minute candles, however you'd like to see it. Now, looking at this, we are going to do a purely technical analysis. That means, regardless of how I feel or what you feel Ripple is going to do, we're going to look at what the technicals say. Now, we can see here that we are in an uptrend. Obviously, we have an impulse that starts right here, and from there we continue to make higher lows. So what does that speak to? That speaks to an overall general uptrend, which is great, especially if you are looking to hold for a longer term. Now what we're going to do is we're going to find exactly where this retracement was. It looks about 70%, and we're going to use the Fibonacci retracement tool. Now when using the Fibonacci retracement tool, you need 2 points, point A and point B. Point A is going to be the start of the impulse or the bullish move up. Point B is going to be the end of the impulse, or where that impulse ends and the bears push it down. So looking at the 30-minute chart, the lowest point or start of this impulse would be right about here. Now point B is easy to chart because we can see that we end right here. Now Fibonacci is not 100% accurate, but it does give a very good representation of potential points of entry, and the extension that we're going to look up will give you a potential point of exit, right? So it looks here that we did come all the way up here and retrace down to, this was that 8:30 where the whole world was going to pump. Now we are live Monday through Friday. You can find our streams. We're doing a live trading challenge where we take $1,000 and we trade it to $10,000 day trading cryptocurrency live in front of you guys. So hit the subscribe button and the thumbs up if that's something you're into. Teaching charts is something I love to do. So we have our point A and we have our point B. Great. Anywhere in here looks like potential buying. Now let's take a look here at the extension. Now you see the Fib retracement. The trend-based Fibonacci extension is going to use point A and point B from the Fibonacci retracement, but we also need point C, and point C is going to be where exactly we retraced to. And what does this look like? Well, we will take point A up to point B, down to point C, where we retraced to, which looks like 338 right here, and this will let us know what we can look for. Okay, now depending on market and how much of a risk taker you are, that will let you scale what your exit should be. Now we took entry at 37 cents, so I can put right here buy at 37, because that's what we did on our stream. We bought at 0.37, and I took all the drawings off here because I want to redraw them in front of you guys. So buy order at 37 cents. Now for our exit here, we can see from the top we retraced we retraced 78% of that move. So 78% of this upward move was retraced. That's huge. So that means we could potentially look for one move under, and we're talking safe here, right? Now nothing in here is a guarantee. Nothing you hear or see should make you enter or exit a position, as I am a random YouTube chart guy. I am not a financial advisor. I am not a professional trader. Now I am a successful trader, but that is because I'm inside my own head, and I'm simply trying to get all of you guys there as well. What I see may not be what you see, and it could happen that what you see is correct while what I see is wrong. So teaching technicals here, showing you what the technicals say. Everything after that is completely on you, my friend. So looking for a retracement here, I would be hunting for a retracement up to 65 cents. That would be the 61% retracement. So I'm going to put here sell 0.65. Now from 37 cents, 37 to 65 is a lot more than the 10% we usually shoot for on our trades, but let's look at a few other technicals to get a broader picture of what we're doing. Now I'm going to go to the 1 hour time frame. Now we can see here, if we look at the RSI, or the relative strength index. Now the relative strength index is going to show you buying pressure to the upside, as we can see here, and selling pressure to the downside, as you see here. Now again, in any one of these indicators is not a 100% guarantee of the move that is going to happen, but it does give you probability and percentage wise, right? So if we look, we can take, obviously, from the very peak down to where we are now is a downtrend. Obviously. I think anybody looking at this chart, this is the price action, this is your indicator, both are showing this downtrend. Now, if we take one that is a little bit closer, okay, we take this point to this point, now that is a bit of an uptrend. As we see here, we have a slight bit of an uptrend. Now what does that speak to? Well, that speaks that yes, we had this downtrend, but recently, the most recent, we see the uptrend, and we can even see it here. We have a confirmed uptrend. Now what does that mean? That means there's no guarantees at what this is going to do, but what it could begin to look like is something like this. Now we are holding 37 cents. With an exit of 65 cents, you can do with that as you will. As of right now, February 9th, 2021, XRP on the 30-minute chart and the 1 hour chart do look bullish. Now this isn't saying get in or get out. This is simply telling you that the technicals look bullish, and we do have massive accumulation right here, which could speak to a fairly large pump. Now, what could this pump look like? Well, we can take a look at Matic today that saw a smaller version of this. Now, we did hit our target on this from 06 to 08, but you can see this small period of accumulation that leads to a pop, and you can see this in many different places. You have a period of accumulation that leads to a pop, and then another period of accumulation. Now, another one, RSR, you have this period of accumulation, which ends up leading to a pop. Okay, so that's not guaranteeing that Ripple is going to do the same thing, but it is saying that we do see the same patterns repeating themselves in many different aspects of life, and the markets are no different. So if you're holding and you're worried about a dump, I can tell you that the technicals say Ripple is not going to dump anytime soon. Please keep in mind that any of these chart readings are open to change within moments, right? And that's the way it always is. You have to get good at reading the charts, anticipating the patterns, and knowing what pattern leads to what outcome the majority of the time. Because the majority of the time we're playing with 65 to maybe 75% odds if we're reading all of our indicators and the price action correctly. So stay safe out there, guys. Try not to lose money. Remember, the entire name of the game is max potential, min risk. We do not get FOMO, we do not panic sell, and we do not worry about what the price action is doing as long as it is in our range. A rabid dog is a rabid dog, but it is not scary if it's inside of a cage. So it's when it breaks out of the cage that we have to reevaluate. So right now, Ripple looking strong.